Hello and welcome to this very special edition of KYC, Know Your Company. In terms of why it's special, we're going to track and talk about Arkade Developers today. And we've gone to their site and we've spoken and gotten insights from the promoter himself with regard to how the business is doing, as well as what the expectations should be. So hopefully we're able to give you better insights on all fronts with regard to this business. Let's first start off with what Arkade does. It was established in 1986, established as a real estate developer and has slowly gone upscale. More premium housing is what they are at this point proud about. It's purely a Mumbai-based company, so they don't have projects outside of Mumbai. Also, in terms of it's focused on developing high-end, sophisticated lifestyle residential developments in Mumbai is what they are calling themselves. They have a strong track record for execution, and we've spoken with Amit Jain, who's a second generation in the business. So in that sense, he's a second generation developer and we've spoken with him as well. Now, in terms of types of projects, there's one which is new projects where land is acquired and then developed. And we went to Arkade Rare as well, where they followed this kind of a model. And then you have the redevelopment model where they go into redevelopment projects, they modernize older buildings and thereafter allocate certain flats to certain tenants, existing tenants, and thereafter sell the rest of the inventory. What we were told is the IRRs on both of those are largely the same. Let's talk about how many projects. So firstly, they utilize in-house resources to manage all their projects at this point. So they don't lean on outside resources or they don't subcontract any of their projects. They've completed over 30 projects totaling 5.5 million square feet at this point. And you'll see some of their projects on your screen as well, which have been completed. That's the map of Mumbai. And those are just some of the projects that they've completed. Ongoing projects, roughly 2 million square feet worth of projects that are ongoing at this point. Those are all the projects they've completed. And even in ongoing projects, they have quite a few. They have one in Borivali, Kandivali, Malad, Goregaon, Andheri, Vileparle, Santa Cruz, Mulund and Bhandup. These are all the areas of ongoing projects that they have and they are currently selling. Now, in terms of the IPO, they've done their IPO in September of 2024, raised 410 crores and development and redevelopment projects, funding of these is what they said the purpose for the fundraise was. But also, to some extent, it's about avoiding taking debt. That's the other thing with regard to growth. So they want to grow, but they don't want to take on more debt. That's one of the keys. But let's talk about the factors and the parameters. Let's discuss those as we do every day. And we'll start off first with key operational highlights, where we are at this point with regard to numbers in terms of development versus where we could be. It'll give a good lens into that. Income statement, balance sheet, cash flow, the key metrics with regard to financials. We'll also thereafter talk about the shareholding pattern, the valuation picture, the street cred, and the guidance and outlook that we can expect from this company and what they're guiding for as well. Thereafter, we'll speak with management. Joining me today, Anushi Vakaria, who tracks real estate closely, and hopefully we're able to break this down better. Anushi, right. Let's start off with operational metrics.
Yeah, so as of every real estate conversation that we have, we do not focus on the income statement first, but we check on the other parameters which are there, which includes the likes of your pre-sales. That's the booking values that the company has able to garner over the couple of periods, that's fiscal years, along with how the collections have been. So if you are talking about the FY22 to FY24 period, in pre-sales, we are seeing from FY23 to FY22 a significant jump. 547 crore is the value that we are looking at as compared to 142 crore. In fact, in FY24, we are looking at more than a 10% of a growth here at 617 crore. In collections, we have seen a significant jump in between FY23 to 24. 258 crore was the value that we are looking at, which went on to increase to about 570 crore is what we are seeing. Number of units sold in FY23 to 24 remain mainly unchanged. That's the number of units sold that we are looking at. But let's also talk about what has happened in the current year. If you look at 9-month FY25 picture, we are looking at a 24% of a growth in terms of where the pre-sales number is concerned. So 556 crore is what we are looking at. Collections have seen about a 16% growth, and areas sold, which is in terms of the square feet which is given, is seeing about 29% growth. So we are looking at a strong growth trajectory in terms of where the key operational numbers are concerned, right, Harsh?
Yes, absolutely. Let's look at, therefore, the income statement that translates from these operational numbers. In that sense, the income statement looks largely healthy. You're comparing FY25 to 9-month FY25, and FY24 to 9-month FY25 doesn't look too bad per se, but you look at the last 4 to 5 year trajectory, and over the last at least 3 years, the numbers have clearly doubled. So a healthy growth clip on that count. But what really stands out for me is, let's look at the EBITDA margins and let's look at the profit as a result of that. You are able to maintain that margin number anything between 26 to 31%. That's the range which they've had, and their profit number translates to roughly a 20% PAT margin on the top line, which is decent in that sense. But balance sheet, Anushi, how's it looking?
So if you look at balance sheet, of course, we will see a significant change because of the IPO issue which had taken place in September onwards. So equity capital in H1 FY25, we are looking at 827 crore. This is including the reserves number that we are looking at. So thereon about the equity share capital increase in what we are seeing from the FY24 number which is there. In terms of net debt, it's a net cash position that we are looking at. 324 crore is the figure that we are seeing as compared to a 46 crore. So overall, a very healthy balance sheet number. We're looking at an overall deleveraged picture in terms of where the balance sheet is concerned. So even that is on a strong numbers that we are seeing, right, Harsh?
Yeah, absolutely. Lower debt in real estate companies is always a positive, because when the cycle turns, it helps. And I believe that's the kind of number that we are seeing. Very low debt.
Yeah, just want to add on to that even if we are seeing the minus 324 crore figure right now, the management is now, even if they are ready to take up little debt in case of there is more land acquisition taking place. So just have to keep that in mind as well if you go forward.
Yes, and we spoke with them, and probably those insights will come out from that conversation.
Right.
But point being that negative 324 of debt is because of the fundraise, the IPO raise. 410 crore of raise, those funds weren't utilized sitting in the bank account. It was sometime in September itself, and this balance sheet is, of course, as of H1 FY25. Let's look at cash flows, though, as a metric. And you'll see that cash flows also growing at a healthy clip. H1 FY25, the cash flow from operations were negative, but you're looking at net cash flow, which was positive, and that's because of fundraising activities that have gone by. Mind you, cash flows will be utilized on a net basis, will be utilized for the purpose of new projects that they will continue to do. But shareholding, Anushi, what are you observing from that metric?
So in terms of where the shareholding is concerned, promoter holding, that stands out at 70% of the ratio that we are looking at. But in fact, if you look at what is happening with FIIs, that mix has gone down from 4.3% to 1.3%. Of course, we have to keep other factors in mind also, like the market volatility, which we have seen in the last couple of months. DIIs, majorly we're not looking at a lot of changes here, 0.51%, which has gone down to 0.16%, while the public holds about public stake has increased to 27.8% as compared to 24.4% earlier.
Yeah, minor tweaks also that will happen because anchor lock-in expiry and the like. So maybe that volatility also keeping this particular structure slightly volatile. Listing happened in September, and therefore you might want to wait for a quarter or two to see how this evens out. But for the moment, given that promoters have a 71% stake, it's clearly a thumbs up. Let's talk about street cred. How much value is left on the table by promoters? And essentially the 1 month performance is 6.6% positive, but the year-to-date performance is -15, and since September, it's -3. So it's largely been flat in that sense. We'll give this a neutral because, one, you've seen markets fall far more than the stock has, so the stock has outperformed the market. But at the same time, has enough value been left on the table as of September 2024? Maybe not, and that's why we'll give this a neutral at this point. Positives plus negatives to look at. We'll give this a neutral. Let's look at valuations though, and Anushi, let me take this up and maybe you can take up the guidance. In terms of valuations, let's talk about the GDV picture first. The gross development value roughly at 10,000 crore at this point. Timeline for execution is 4 years, and the PAT guidance is 20% at this point. So you're seeing largely a 2,000 crore PAT over the next 4 years based on current development. Market cap is at 2,847 crore. Not looking egregiously expensive in that sense. Let's also compare it to other peers. That's how the PE for the average 5-year average PE for all real estate developers stacks up. Now, in terms of why other developers may not be the best benchmark, because a lot of other developers will have land banks. And therefore, and large land banks, something like a DLF will have that, and therefore they might command a premium in that sense. Difficult to kind of segregate because it's a small developer, but nonetheless we'll give this a neutral because largely there are positives again and certain negatives to keep in mind. So in that mix, but what's the guidance like, Anushi?
Well, if you look at in terms of the guidance, now you did speak about the 10,000 crore of a GDV factor which is there. So considering that, let's just break that down. So there are 9 redevelopment projects which are at the size of around 7,000 crore. This also includes ongoing projects which have an unsold revenue potential for around 2,500 crores. So overall, it's the 10,000 crore of a potential that we are looking forward for Arkade Developers. The company did mention that they are expecting to launch about 3 to 4 projects every year. Even if you look at the current pipeline of existing projects, you already spoke about how 4 years is the kind of execution period that we are looking at. What needs to be focused on is the profit margins, wherein the management expects it to sustain around the levels of 20%. So this is the overall guidance that we are seeing for Arkade.
Okay, how does it stack up? Let's quickly pull summarize all of the metrics that we've spoken about. In operational metrics, good growth. Income statement, good growth last 3 years. Balance sheet, deleveraged at this point, no debt. Cash flow is decent. Shareholding is a thumbs up because 71% held by promoters. Street cred, decent-ish. We've not seen a large correction on the stock price. Valuations, also looking decent compared to peers at a large discount, but there are exceptions within that peer pack. And outlook looking positive because there's a good visibility with regard to growth. 6.5 on 8 is what an Arkade gets on our KYC rating. But let's not delay this further. As promised, let's take you to Arkade Developers' rare project site in Bhandup, where we spoke to Chairman and Managing Director Amit Jain. Take a look at this special coverage from the KYC team.
Hello and welcome. Interesting conversation. I am in conversation with the management of Arkade Developers. I have with me Mr. Amit Jain, who is of course part of the founding family of Arkade Developers. Mr. Jain, first off, great speaking with you. Thanks so much for doing this.
Thanks for having us.
And of course, we are on site, so you'll see the development of Arkade Rare happening in the background as we talk. But sir, so a little bit about this project first off. It's a 750 crore GDV project, around 430 residential units, around 50 commercial units. How quickly do you anticipate completion?
Our internal target for possession is financial year 26. wherein we should be done with the completion of the project.
And how many units already booked or already sold?
85 residential units are already booked,
So around 20%.
around 20%.
And commercial, you all aren't yet.
Commercial, we propose to launch very soon.
Okay.
We
understood.
haven't yet started the bookings.
Understood.
Yeah.
Understood. Correct.
Yeah.
And so how should we look at new launches as well as how should we look at gross development value for Arcade? So currently you're at around 7,000 crore GDV. You closed that at Q3. You've added a couple of projects thereafter, around 3,700 odd crore in terms of GDV. So your current GDV pipeline is around 10,700 crore. What's the new acquisitions you're looking at, both greenfield and brownfield, and how are you looking to balance those?
Acquisition is an ongoing process, both on the land side as well redevelopment side. We have a strong business development team working around the clock on both the sides. And this financial year, we are looking to launch 4 projects, 3 redevelopment projects in Santa Cruz, Goregaon and Malad, and 1 land project, which is the Filmistan one in Goregaon West. And this pipeline of 10,700 to 11,000 crore, our internal target is to complete it in next 4 to 5 years.
Understood.
Yeah.
So FY26, you launch the 2 projects which you've gone ahead and announced.
No, so 3 of the redevelopment projects are the ones which are acquired earlier.
Okay.
And the land project is the one which is acquired in the last quarter of this financial year,
Understood.
January this year.
So FY26, you will have 4 launches in all.
Yeah.
And cash flow will start to accrue from FY26 only.
Yeah,
So what's your pre-sales target for FY26, if at all there is one?
So 20% is what we target our pre-sales to be of the total potential. So amongst the 4 projects, the top line potential is 3,500 crore, out of which the 700 should be acquired through pre-sales at the launch stage.
Got
The
it.
remaining will follow as per the progress of the project.
Understood.
Yeah.
And that should be sufficient to fund
Right,
your
that should be
aspirations.
sufficient to keep the ball rolling in terms of cash flows.
Understood. And how much would that be? So just give us a perspective. You've got a healthy pipeline, therefore, FY26, how much of this 700 crore will you utilize? You currently sit on around 100 crore of cash. So how much do you utilize and therefore how much are you left with?
No, we pump in the total proceeds towards the approvals of the project and the construction of the same project. We do not take it outside the projects.
Understood.
Yeah, and if required, we pump in from our own funds
Understood.
towards the approval and the construction.
Understood. So you
Yeah.
use it project-wise,
Yeah,
SPV-wise, you don't...
We have a strong financial
Got it.
discipline.
Got
Our
it.
take home is only towards the end when the projects are sustainable, self-sustainable.
Got it. And while I was going through and reading up, I got to know that your average completion in terms of project time is 23 to 24 months, which is
Yeah.
fairly healthy.
Very healthy.
What makes you stand out in terms of completion time? What gets you that
So,
kind of
2
completion?
things, like we start the projects only after having all the approvals are in place. So none of our project is stuck because of the approvals. That is one thing. And our sales velocity are very strong, and the cash flows subsequently because of the sales velocity are very strong. We have a very, very dynamic and young execution team which takes care of timely completion and achieving the targets. And we work day and night towards achieving our targets.
Understood. So, and therefore you're confident that that will be maintained even going forward.
Yeah, we are getting stronger and stronger. The team is getting bigger and better only.
Understood. And how are your margins like?
Margins, we have a healthy PAT of around 20%.
Got it.
Currently in financial year 25, until the 3 quarters, we have 20% plus PAT.
So, but that's also because a larger proportion of what you are doing currently is greenfield versus a redevelopment. Redevelopment currently around 35%, if I recall right, during listing.
Okay.
That mix was expected to change a bit. You were expecting a better mix or a larger mix coming from redevelopment. Is that understanding right?
Maybe plus or minus 5%. It may vary year on year basis. but we always see to it that our margins are intact and getting better only with every project, every delivery. The premiums that we manage to get in for the end product is increasing only. So the margins should get better and better.
Okay, and how are the IRRs for each of these? So, is the IRR broadly the same, redevelopment
IRR
versus?
as in return to investment is broadly the same. Top line to bottom line, it may look like the margins are better in land product, but return on investment, the money invested is lesser in redevelopment. So the return on investment is broadly the same.
Got it. And is there a goal to make it 50-50 or no such
We'll try
goal
to
with
have
regard
a
to mix?
fine balance. We'll see to it that we are around 50-50 broadly in both the segments.
Competition a concern in the markets you operate in?
So there is enough space for all of us. The residential market is a big market and there is enough space for all of us.
Understood. So let's try and dive deeper into numbers therefore. So around 10,700 crore odd is the anticipated top line from all your projects over the next 4 to 5 years.
Yeah. Plus the additional inventory which is there in the existing projects. So totaling to 12,000 crore.
Okay, so 12,000 crore odd. And largely all of that will get recognized in your P&L over the course of the next 5 years.
Yeah.
So as it gets recognized, you'll make roughly a 20% margin on it. So around 2,400 crore is the PAT that is anticipated on that.
That's what the plan is. Yeah.
So that's the best way to look at it in terms of cash flow. Of course, FY26 looks like a decent year. What about FY27 and thereon? Enough funds which will come in to support all your development projects?
We keep on accruing. The discipline is a lot. We do not disburse the money here or there. The discipline is a lot.
Understood. And the profits coming in from projects will then fund new projects. Is that how it works?
Yeah, that's cyclical. Yeah.
Currently, no debt on your balance sheet. Any plans to take on?
We are sitting on cash. We are sitting on 100 crore plus.
Correct. Yep. But any plans to take on debt at some point?
As and when, if at all required, we'll go in for construction finance, which is available at a lesser rate.
Which is just what's the rate that you get in terms of?
It's around 9%.
Okay, understood. Yeah. Understood. At this point, of course.
If at all, maybe in extreme case scenario, we may dilute our equity. The second best option.
But it will be a fresh equity issue.
Fresh equity.
You won't be selling. Currently, you own 70%. You intend to continue doing that.
Yeah.
Understood.
It's only for business, not for sales purpose.
Can we say that around 12,000 odd crore, the next 5-year anticipation is that 12,000 crore odd of top line will get recognized on your P&L, which will convert to around 2,400 crore of PAT. And thereafter, you'll keep launching bigger and better projects. And you'll keep growing within the real estate market. What's the aspiration like? Is it to go to other geographies or is it to stick with MMR?
Stick with the core markets. That makes it safer. And as and when you get opportunities, we go out slowly and gradually. Like currently, we are in the process of going to Thane markets. So slowly and gradually, we go northbound. But as much as possible, stick to the core. That makes it safer.
Actually, let's go across on site, see how construction work here is progressing. Very interesting project. Nearly 500 units, commercial plus residential coming up here. Mr. Jain, I want to try and understand as to how this is playing out. So when did this start? When did this construction start and how quickly has this happened?
So the construction started in September 24.
Right.
And we are here in March and we are done with the foundation for all the 7 wings.
Okay.
A to G, we have 7 wings in the project, 430 units. And we are at, this is the phase 1 of 4 wings, where you see the work for 3rd and 4th slab ongoing. And the work for other 3 wings is going on at the 1st floor slabs.
Got it.
And we intend to complete the project by next year.
Got it.
December 26. And hand over the possession by March 27.
And what's the risk of approvals not coming through? At what stages do approvals come through, and is there a risk
So the
of that?
beauty of Arcade is that we started the project only after having all the approvals in place. We have
Understood.
100% approvals in place for the
Okay.
project. Yeah.
Understood. Understood. So these are currently the parking lot.
Yeah, we
of-
have
of-
parking lot of ground and 4 podiums.
Got it.
Yeah.
And thereafter, what's
Thereafter,
the
one floor is dedicated for the amenities. We call it as eco deck.
right?
And thereafter starts our habitable floors
Understood.
from the 6th to 21st floor.
Understood.
Yeah.
Understood. Got it. And what's the current going rate at this point?
So
here?
ongoing rate is an around 24,000 per square feet of RERA carpet.
Okay.
Yeah.
And does that change as the completion or as the
work
project nears
progresses,
completion?
it increases. Generally speaking, it increases as per the progress of the project.
Understood. And do you expect a sustainable square foot, the price at which you've quoted 24,000?
Yeah.
You expect that to sustain over a medium to long term?
Yeah. There is not much available at these rates. These are kind of the least rates that you can find in Bombay.
Understood.
Yeah.
Understood. Okay. And so this completes by end of 2026, you said.
Yeah. Next
Okay.
year.
Okay. And then you hand over
The
to
possession, 3 months for all the handing over arrangements, and then we hand it over in March 27.
great. Very, very interesting. So we've
Yeah.
tried to break down how the project also goes about in terms of timelines. But thank you so much, sir,
Thank
for
you
doing
for
this
having us. Yeah.
and breaking this down for us and our viewers. Thank you for tuning in.
All right. So that was, of course, the management of Arkade Developers, and we've tried to break it down on this edition of Know Your Company. Hope that was helpful. But completely out of time on this edition of the show. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.